Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report with Alpari. What do we have today? Well, we are under the influence of FOMC yesterday, which was perceived hawkish. The chances for a rate hike in June went significantly higher from 70-60% to 90%. Obviously, we didn't get a rate hike yesterday, but it wasn't. It was expected that we won't get any. Yes, the statement was hawkish. That is why rate hikes in June are more or less certain right now, and American dollar is much stronger across the globe. Overnight, we had a huge decline on commodities. Most of the commodities like oil, like gold, silver, iron went significantly lower. It was additionally driven by a stronger dollar. But this movement is very dangerous for the long-term situation on instruments like gold or silver, because we broke or we are about to break long-term support. So it does not look so good for the buyers on gold or silver. It does not look good on for the buyers on oil at all for a long time, and we are talking about that for some time to we were not to be bullish on oil, and actually today we just made new fresh lows on oil. Apart from that, what we had was a debate between Macron and Le Pen. It is said that Macron won this debate. That is why euro went significantly higher. So we had a drop after FMC on euro dollar. We had a reverse movement caused by debate. On most of the pairs, American dollar is much stronger on a pair with, for example, euro. It's weaker because of the debate. On a cable is a bit stronger, but we have a bullish reversal on a midterm support. This movement is an additionally fueled, driven by better data from UK. What I will show you the calendar maybe first. So what we have here is the calendar for Thursday. You can see the we had the retail sales data from Eurozone. Let me switch for the calendar for today only, because I would like to show you this market services PMI, which was an important data. Here you can see that it's labeled as a non-important, but it was important, which caused a reversal on British pound. What do we have today still to come? As initial jobless claims, as always on Thursday, non-farm productivity. It's not non-farm payrolls, obviously, it's non-farm productivity and unit labor costs. Tomorrow we'll have non-farm payrolls, so all eyes on that. From the fundamental point of view, also we should get a vote about health bill proposed by GOP, good old party, by Republicans, and it is said that this time it should pass, but we'll see. And also we are close to avoid a government shutdown, which was the thing in the United States. It was a huge thing a few years ago for the financial markets, but it's happening too often, so markets became resistant for that. They are not focusing on the government shutdown in the United States at all. It was a problem a few years ago, like in as far as I remember 2011, but it's always a problem So that is why we're not putting much of an attention over there. So now we can take a look from the technical point of view on those instruments. As you can see, this is cable, and yes, on cable, cable is actually higher today. We can start with the cable, why not? This is correction after this movement caused by proposal from the government, from UK government, about earlier elections, and this is the correction there, right? The correction after this movement was very flat. It was 150 pips, and look, the correction here was 140, 138, so very similar correction. That's why I labeled that as a correction equality pattern. What do we have here is a wedge. Let me change the colors. That is a wedge. As long as we stay inside of the wedge, the sentiment is positive. Once we will break the upper line of the wedge, that will trigger a buy signal. As long as we stay above this support 127.60, the sentiment is definitely positive, right? You can label that as this color. So it's all good on British pound to American dollar. It looks promising. It looks alright, especially this reversal on the first horizontal support here. On H4 it's a beautiful hammer, and after that the price should continue to go up. Next instrument I have for you is New Zealand dollar to American dollar, where we said yesterday that the price was creating a shooting star and there is a possibility of a further downswing, and that's what's happening right now. Obviously we got a help from FOMC yesterday. As you can see, it was this movement, and we are talking about that somewhere here, I guess. Yes, 15. Somewhere here. Here we said that there is a chance for a bearish movement here, and that's what's happening. So here technical analysis and fundamental analysis come together. Once we will be able to break the lows from the end of April, that will open a way to the closest support here, and will trigger a sell signal. So altogether the situation looks strongly bearish, stronger bearish in our opinion. That's how it should go here on this instrument. On a Kiwi, Australian dollar to New Zealand dollar. Here they finally made another attempt to test the neckline. I don't want to say that break the neckline, but test at first. First contact is positive for buyers. As you can see, we have a pin bar candlestick with a long tail. It is a positive sign for buyers. It looks promising. It looks right. It looks like this support will be defended. Once we will get a hammer here, or maybe a pin bar will be enough, but if we'd get a hammer here, that would be great. That would be a buy signal here. Again, another one, because first one was created here. Euro to British pound, they didn't manage to close this gap, but we are still in a sideways trend here. As long as we are below this horizontal resistance and this horizontal support, the sentiment is neutral. Euro to Japanese yen, party continues. As you can see, only 1, 2, 3, 4, 5 bullish days in a row. Breakout of the upper line of the downtrend, so it looks promising. It looks right. Looks like it will be continued from the price action point of view, but obviously we have to be aware of the fact that we can have a correction here, right? There always is a chance of for a correction, but it will be only a correction. In the long term, the buy signal is present on this instrument, no doubts about that. American dollar to Polish zloty. Look where we stopped. Is it a surprise for you that we stopped here and we draw this bullish candle? For me, it is not. Again, I hope you're not sick and tired of this, but look how beautiful is that. 4,500 pips, 4,500 pips, 4,500 pips, and a bounce. And this support goes together with the lows after Donald Trump was elected as a president. So those lows are significant. And what do we have here? We do have a bounce on this support. We do have a double bottom formation. It would be much better to see an upswing today, because this breakout that we had early in the morning is now being retraced. But I love the fact that we bounced on this support. Maybe it's not the greatest bounce in the world. We still need to wait for the situation to develop, but it's promising. It's still promising. Next instrument is Euro to Australian dollar, where we perfectly can see how big is the optimism on in Eurozone. This optimism in Eurozone, that's interesting, because I think we all remember the debates between Clinton and Trump. It was said in the mainstream media that Clinton won the debates, that it was great that Trump lost. And after those debates, American dollar was much stronger. There was a risk on mode, so traders were looking for risk, seeking the risk, because they were happy with that the Clinton won. And we all know what the outcome was. That finally, even with this information from the mainstream media that Clinton won the debates, Donald Trump won the election. So I don't know why we are seeing such a huge optimism here, that polls just can be wrong, as it were during the Brexit and during the elections in US. So I'm worrying that traders are falling in the same trap that they fell recently twice. Right? They fell twice in 2016 in the same trap of inaccurate polls, and they are doing that again. In my opinion, it's a bit too risky to follow that. But let's look on that from the technical point of view, where we do have a bullish signal. We had a bearish signal here with these two shooting stars bouncing from the horizontal resistance, but it was quickly denied with obvious help from the fundamentals. But yes, from the technical point of view, I have to admit it looks promising, it looks alright, it looks bullish, no doubts about that as well. Now the instruments I was talking about in Trading Sniper, so our short video with the best trading occasions. So what do we have here? As the price came above the resistance. Now we had a sideways trend. We came above this resistance, obviously, after the French elections. And trading on euro-dollar was uneventful. What we had here is a price moving sideways trend, locked in a pennant formation between those black lines. Now, I thought that we're gonna get result solution after FOMC, but we didn't. The price went down sharply. I thought that they're gonna break the lower line of the pennant and they will try to close the gap here. But after that, the bullish movement came, driven by this debate. So apparently traders are very happy with that. They think that odds for Macron to win with Le Pen are much higher. That is why we got a bounce from this lower line of the pennant. But look, they couldn't break the lower line of the pennant, and in addition to that, they they cannot break the upper line of the pennant, and now the price is creating a shooting star, which is bearish. So even despite the fact that we had two important macro events, so FOMC and debate, we do not have a final result in euro dollar. That's an interesting one. We are waiting for harder data for a bigger event that can trigger a breakout here. So far, we do not have it. But FOMC yesterday helped to trigger buy signal on American dollar to Japanese yen. Right here we have a full buy signal. What we're having here is an uptrend, is a bullish wave, and then a bearish flag with those blue lines. Flag is a trend continuation pattern. We yesterday said that we should see a breakout of the upper line of the flag, and that's what we saw. You can see that the candle from yesterday closed above this resistance. The next candle is making higher highs and higher lows, which from the price action point of view increases the chances for this breakout, increases the chances for a success in the bullish camp. So it looks alright. It looks alright for the buyers. Next instrument I would like to show you is silver. So silver, look at those 3 weeks in a row. That's catastrophic. That's a strong sell signal, but there is a hope. But that's the last hope that traders can think about. Why is that? Because it's a long term. It's a weekly chart, remember. So it's a long-term chart. We are having an uptrend. Which started at the beginning of 2016. Another leg up was at the beginning of 2017. Now we are testing this line. Breakout of this line will trigger a sell signal. Sell signal is still present in the short term and mid term, but in the long term not. In the long term I mean on the weekly chart, because on a daily chart there is a sell signal without any problems here. So this is kind of a last chance for buyers to trigger a reversal. At least maybe they can think about triggering taking profit action in the seller's camp. I think that's the plan. That's should be the plan minimum for them. But we are slowly approaching a place where the magic should happen, right? Resistances and supports are the places where smart money decide about the future movements, right? They or break those levels or bounce from those levels, and what price action traders, retail traders as us, what we should do is just to follow that money. This is silver. Silver in a much worse situation than gold, because this is gold. On a weekly chart, as you can see, to this to the same line that I said, we still have a lot of space here. We still have like $50, $60, even $70 to this line, but on a daily chart, we got a sell signal. Why is that? Because we broke uptrend line. The uptrend started at the beginning of December, and we broke out of the bullish flag. As long as the price was inside of the flag, we could at least hope, but there is no place for hope in trading, remember that. So we could at least read this situation as a bearish flag, as a bullish flag. Why bullish? Well, it's going down, but bullish because it should result with a bullish breakout. But as you can see, this flag got denied and the trend line got broken. So two bullish supports are gone right now. The only one which is left is here, because that will be the same correction, right? So that's the last one. If the price will break it, that will be an overbalance So the price will be the largest correction in the recent uptrend, which will mean that there is a trend change. The trend changed here. Obviously, we can make new lows, then retrace, bounce from the trend line, use that trend line as a resistance, and then come down. We can do everything, but so far, short-term, mid-term situation is bearish. Long-term situation actually is bearish too. This is just the last hope, which can work but does not have to work. American dollar to Swiss franc here. Despite that the situation from the technical point of view is promising, unfortunately I cannot tell you anything interesting because we're locked in a sideways trend since 20th of April. So really, trust me, I would like to show you something interesting here, but I just cannot because the price is not letting me to. Australian dollar to American dollar. Finally, we broke this horizontal support and we are heading to this dynamic support here. Remember that gold and Australian dollar to American dollar are correlated. There is a very nice correlation here. There is a nice correlation here, so we should see the price touching this support. Euro to New Zealand dollar. Most probably they're gonna break this resistance. That is why I didn't tell you to go short here, but I said that the sell stop order will be better idea because I wasn't convinced about short position. If they would make new lows, that would be bearish and that would be an invitation to join them, but they didn't, and the price went higher. So we can remove this sell stop order idea for a while because it's probably not gonna happen. Now, British pound to Canadian dollar. The party goes on. Since the breakout of the wedge, we had 1000 pips upswing. That is very nice. It does not look like it will stop, but we can have a small correction here and then an upswing. The sentiment is definitely positive. Now let me show you stocks and oil. S&P 500 first. So we shouldn't get this government shutdown. We should pass the health bill. Fed is happy with the condition of the economy. Everything is awesome, as they say. We won't get Le Pen as a president in France probably, so it's time to cheer on the stock market. Actually, from the technical point of view, it's also positive. Why is that? Because we do have this rectangle here, a sideways trend, a very flat correction. And this hammer is especially beautiful here because it bounces from the lower line of the support and the price advances higher. Looks really promising. We are about to break this horizontal resistance and make new all-time highs on S&P 500. I think many traders are waiting for that. We'll see what will happen, but obviously for stock traders it's just another lazy day. They are making those higher highs and higher highs all the time, so for them it's just a lazy Thursday or maybe lazy Friday. It will be. We'll see. Maybe we'll get a help here from non-farm payrolls. I would like to tell you, for example, what number in non-farm payrolls would support the upswing on stocks, but it's completely not relevant because Believe me, recently, for the last, I don't know, 2 years, it didn't really matter what was the non-farm payrolls number. Obviously, yes, it caused short-term fluctuations, like upswings, downswings, like on a roller coaster. But in general, a day after that, 2 days after that, etc., it was always hawkish. It was always bullish for stocks. So it didn't matter if the non-farm payrolls disappointed or was a huge beat, were much better than expected. And midterm, it caused stocks to rally. So good news were good news, and bad news were still good news. That's the logic behind the situation on non-farm influence of the non-farm payrolls on stocks. And this is DAX. Look at that. That is beautiful. Sideways trend. 2 days ago an upswing. Yesterday they used the recent resistance as the closest support here. That's the beauty of the price action. And then they went higher. Today we do have another upswing. It looks great here on DAX as well. Well, it's funny because it's funny what Le Pen said on yesterday's press conference, on yesterday's debate, that no matter what happened, women will rule the France. If she win, it will be Le Pen, and if Macron will win, that will be Angela Merkel, right? So that is why maybe probably DAX is cheering that because Macron has bigger chances, it will mean that Merkel will rule 2 countries at once. She will rule Germany and she will rule France, and Macron will be her puppet. That's why maybe we're seeing this upswing on DAX. And the last one, WTI. Look at that. This is oil, WTI. Oil is getting hammered. We have new lows. We beat those lows from March. Now the closest support is somewhere here, levels from October. We just need to highlight that. It would be nice to see price of the petrol dropping in such a fast pace. When they are going up, you can see that on the petrol stations straight away, right? But if they are going down, it's not so easy. It's not so easy to see drops on petrol stations. But yes, so we have new lows. We are on the lowest levels since 30th of November. What can I say? The situation is definitely bearish, and there is not much that we can do about that. OPEC cannot do much about that as well, apart from jawboning any verbal interventions. The global battle between demand and supply is lost, supply won, and the price is going down. Simple as that. Okay guys, thanks very much for watching daily analytical report. Please do remember